Apple stunned investors with a rare warning that revenue from its first quarter, which includes holiday sales, will not meet expectations. In part, the company blames slower iPhone sales in China. The downbeat forecast from the tech giant is helping drag Wall Street futures lower. CEO Tim Cook said Apple expects about $84 billion in revenue for the quarter. That's actually down from a previous forecast of $89 to $93 billion. Cook said a weaker Chinese economy and trade tensions with the U.S. are hurting Apple.
It's clear that the economy began to slow there for the second half. And what I believe to be the case is the trade tensions between the United States and China put additional pressure on their economy.
Cook said Apple plans to make it easier to trade in phones and will improve financing plans to help drive sales. CBS News business analyst Jill Schlesinger is here. Good morning.
Good morning.
This is remarkable what Apple has done. What does it say about our global economy?
Well, it definitely says the Chinese economy is slowing down. It may not be precipitous. We might have seen 6.5% growth in 2018. Those are the official figures out of China. Some dispute that. This year, we're looking at maybe 6.2, 6.3%. That seems like a teeny tiny differential spread off over 1.4 billion people. It's a lot. And that Chinese economy was slowing down already as before the trade tension started bubbling up. But we see the effect of this. Exports down dramatically. Retail sales in China down by the weakest amount. We saw the weakest reading in 15 years. So things are slowing in China. That's the second largest economy in the world. It obviously impacts everyone.
And obviously other companies now are going to be paying close attention to their revenue forecasts in China as well. It's not just Apple, but you've got auto industry and you've got the other tech stocks too.
And we not only that, we definitely see it in the auto industry, but look at some of the high-end luxury retailers that are really on edge about this. We saw Tiffany come out with a warning at their last results. LVMH also very much concerned. Why? Because the Chinese were set to become the second largest consumers of luxury goods. Supposedly, over the next course of 5 to 10 years, maybe 45% of luxury goods being purchased by Chinese. If their economy is weakened, clearly they're not going out and buying
And
stuff.
quickly, can we directly link this to President Trump's trade war?
I don't think you can directly link it. I think the trade war has exacerbated a slowdown that was already in effect in 2018. Will continue this year. We'll keep an eye on it.
And makes more likely China will strike a deal?
I don't know. What do I know?
A lot more than most others. You know.
Interesting. To be continued, but really interesting. Thank you.
Yeah, and we are in that 90-day freeze as
Yes.
well in the trade war, so we'll see how negotiations go.
Exactly.
So thank you.